All right, let's try to get you guys a update on this real quick. People might be seeing the markets moving, want some kind of update. So, going back over this, if you followed anything from the weeks prior, basically when we started coming down into these ranges, we told you that we were expecting a relief bounce that you could either, play in the short term, or you could be dollar cost averaging down to try to get out, or if you were looking to open a temporary swing trade or new position, that these areas down here was where we were expecting to start to get a bounce from. I told you that if we got up into this area, this would be your first overhead line of resistance. And the reason that line was green was this was the general range. You could start to take profits. If you wanted a super safe and if you wanted a safe and easy trade, then right here in the beginning of this range, you would go ahead and take your profits and, just see where it went from there. But simple and smooth and easy. It came with so much force, even on a lower time frame. Even if you look at this on a 1 minute chart, there's no candles. It just blew right up through here. So we always tell you when you make these gaps, expect at some point to worry about coming back and filling them. We started bouncing around in here and holding support, which made me think that maybe we were going to get ready to come down and at least fill this gap before we tested and went back up. Instead, we opened right back up the next day, today, Tuesday, with force again, blasted right through this next line, straight through in here where I said was your more guaranteed take profits, even more aggressively than just right here was how I explained it. Once you got up above here, I told people once you get up into the 3,700 to 3,750 range, expect resistance. And even if it's just short term, you can sell it off and rebuy your position down here. If you're looking to get out, this is where you get out. If you're looking to, like I said, swing trade it and then reset up again, I told you to expect this and to come down and then try to create support on this or even get back below it. At first this morning, I was going to post you guys an update. It looked like we were starting to hold resistance underneath this line. And then I thought we might come down already and retest this, and fill this gap over here on the left, which still could happen over the course of like Wednesday, Thursday. And if we hold this line though, and stay above these, then that does show continuation and strength moving forward and a further push higher. So, these are the levels to watch for. These are the ways you should be playing this. As of right now, it does look like the markets are setting up to possibly extend this rally a bit further, and we could possibly get up into the 38 to 3,900 range before our final, send back down and basically change direction on the flow of this again. But as of right now, we're starting to have a couple days back to back and moving up. This could end up being the October, as everybody calls it, or the midterm rally, as if you will. If you're wanting to play this longer term and you're looking for a more of a 1 to 3 week swing trade, those would be the higher numbers I'd be looking to get out at. Is somewhere between the 3,800 and 3,950. Will we possibly jump into the 4,000, 4,100? I see guys posting videos that everywhere. I see, wave theories and wave counts, Elliots that go up into those zones. But do you want to hold all the way to the end and then maybe miss your sell and then, just hold longer term than that? I mean, if you don't care, that's fine. But I still foresee, at least by, say, between Christmas and mid January to February 2023, I'm still seeing, if not new lows overall, at least a retest of all these lows. So even if you get up into these areas, expect to come back and at least retest this 3,600 range. It went down to, at one point, we dropped down here over here to 3,490. So I'd expect to at least come down, fill this gap, and retest the 3,600 range, or even completely fill this gap and you end up, back down just below 3,600, like a 3,590 or something like that. As of right now, what I'd be looking for on the more bullish case is extra bullish would be we automatically start holding this line of support right now. We don't lose this line today or tomorrow. Even if we push down it for, a brief moment, we come back up and say, no, we're staying above that line, just like we did right here. and then this push will start going higher immediately. What could possibly still, happen, and some people might even feel is kind of more bullish, is you come back down here and you retest this, turn this, say 36.15 to 36.20. I'd even be more happy if it stayed just above this for a little bit and we did like a 36.36 or something. But really, we can come down here even and fill this gap. I mean, really, just the top half. I don't know. So that could be up for debate. How much of this gap needs to be filled to show that support? But even if we came back down, held this line, and then came back out of here, your next push up will most likely have more momentum, especially since we don't have any immediate Fed meetings that everybody's extremely worried about, and we're going into earnings season. Earnings season usually pumps markets regardless. Midterms often pumps markets. Many people believe November is, just an automatic green month for stocks to some degree. So, that's your bullish thesis if you want it. The bearish end of it is, or the swing trade where to get out end of it is, and why is I still see a lower low coming. I still see, more turmoil in the markets, more turmoil globally. Maybe we take a, brief relax for the holidays and midterms, and the stocks were oversold anyways. They could use a relief bounce, but that does not mean that there's momentum to then go make new highs or something. So definitely pay attention to the idea that, if you're swing trading this, buy these lows in the 35, 3600, whatever your stock is. If you're like, oh, well, I'm not trading the ETF, or I'm not trading, that whole thing. That's not mine. Well, whatever stock you have, especially if you're trading tech and growth, when this comes down, your stock will go down even more dramatically. If this moves a couple percent, like say 2%, your stock might move 8 to 12%. So watch for this to come back down. Buy anywhere, from 35.50 to 36.50 on your lower retest, and then jump back over. And when your stock is pushing higher, look and see where the S&P is at, and go ahead and try to, pull your profits in the 3,700 plus range. How high you want to take that is up to you, with, how far you want to push that greed, basically. But your safe play is buying your stock when you're retesting the S&P at 35.50 to 36.50, and then reselling your stock between 37 and 3,900, and just, play it off of the S&P like that. You can do the same thing with Bitcoin. You'll find Bitcoin, drops when you're down here, and then Bitcoin's going to go up a lot when you're up here. So this is how, you can play your stocks. Or if you're actually trading the, the SPY, this is, your levels to watch. But in the grand scheme of things, remember the bigger picture, which is by the time you get up to these higher levels, maybe there's a gap all the way up here to fill at 4,000. After that, I'd really be looking to, take your profits and get out. And once again, in the bigger picture, let's zoom this out and go to a higher time frame. In the bigger picture, you're still in this channel. You see that? You see how that channel was so far away when I'm zooming out, and you're like, oh, that doesn't matter to me. This is the channel you're in. We've gone up to the top of it. We come back down. We have not quite touched the bottom, which is the direction we are headed. Maybe we pause in the middle, come back up, and in this area start to touch the top. But the top of this channel, depending on how fast we do it, because the channel is moving down, if we were to come straight up today, and stocks don't move in linear fashion, so that doesn't make a lot of sense. But if we were to come straight up today, that's like, 4,100 range. You work this around for the next, few days into the month, and the top is 4,000, a little bit deeper out, and the top is 3,800, so these numbers are coinciding with what I'm saying, and the time it's going to take to chop around in here to get up here level by level. When you get up to this level, me personally, I'm expecting to, rebound and head back down towards the bottom, which is then going to make new lows. If we come right up here right now and hit early and come back down, then your new lows are in the 33, 3,200 kind of range. If this continues to chop and play out, or if we were to even not hold this line, get a move down right now, then we get an, what some people might start calling the low is in, but it'll just be the new current low. And then we bounce, we come back up, and then get that 3,800,
then as time's moving out and this is moving down and we come down and test down here next time, you're literally starting to talk about that worst case scenario 2800 to 3100 range that I've been warning people about, that I think is the actual market bottom range that we will find by, I'm thinking next year. I'm thinking Q1, Q2 of next year. If you wanted me to put a crazy date and try to pretend to be Nostradamus, now I can't even talk. You want, now I sound like Nostra stupid. If you want to, have me try to put a Nostradamus on this, I would say right around March. If you want to get tighter than that, I'd say between March 18th and 27th, maybe even like 19th to 23rd range if you wanted a real tight. But somewhere in that range is where I think we actually find the market bottom next year. And I think that's what it'll also coincide with. They really start telling you that recession is solid and we're looking at depression. They'll start using that word. And they'll also start really hammering down on how bad this this housing market crash is going to be. And then the housing market crash news, as well as all the extra drama with the recession, depression, and all that, it'll just help draw the stocks down and create that crash even deeper. And then I think in the 28 to 3100 range is where you can really start thinking you've found a bottom and start putting more of your assets in. But let's just play this one level at a time, and let's pay attention to the macro. I mean, that's what's most important. I mean, if by next year we're in 3 global wars, well, then I'll have to, extend how bad I think this can get. Are we talking 2400, 2500? I mean, so we have to play this level by level. But right now, that's the outlook I'd be looking for. And anybody that starts to tell you this bottom is in, and now Bitcoin's going back to 28 to 32, and the S&P back to 4,500 plus, be very wary of following only accounts like that. That will get you hurt. Go find yourself an account that's telling you Bitcoin's going to 8,000 also to follow, and listen to all his, and try to figure out your opinion in between, hopefully, and, use good information from both sides. Use bears, use bulls, and try to create your own intelligent, decision based on that. I mean, it's your money. They're not going to give it back to you once you lose it. So, be cautious. Capital preservation is most important in these markets. And if you need anything specific on a timeline, time frame, you're trying to trade this over the next day, the next week, the next month, 3 years, feel free to hit me in the comments or DM me, and I'm happy to try to make something more specific for you. But as of right now, that's my general outlook. You guys have a good Tuesday and trade safely.